The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we saw more strength in the grains and oilseeds on the day Tuesday, although we did fade a little bit into the close. Cattle complex, more pressure in feeders. Try to find some green in the live cattle. Let's talk through things. Joining us for market analysis, Matt Bennett with agmarket.net. Matt, welcome back to the show, sir. Good to talk with you again. Hope all is well.
Absolutely. Yeah, it's been a wild ride here for sure. We've been done, I guess, farming actually 2 weeks now. So we had a super fast harvest in this part of the world, just dry as a bone. Started cutting beans, picking corn, you name it. 7:30, 8 o'clock in the morning every day because we had no moisture, to be seen. So there was no dew to speak of. Moisture contents, we waited a little bit there in September to get stuff down under 20 on corn, but I mean, then we couldn't get to everything quick enough, but finally got a rain there about a week ago, and then we're getting a little shower here this morning, but we went almost 11 weeks with half inch of rain was the most we had on any farm. So it's been a wild year, but yeah, these markets are pretty wild for sure. I mean, if I have one more person ask me what's going to happen with a trade deal, I'm going to go nuts because I've got no clue, Jesse. There's a lot riding on this, but boy, we've reaped some benefits ahead of time.
Well, to that point, I think that's a good spot for us to start is obviously all this U.S.-China optimism that's out there. We got a framework for a discussion, whatever you want to say. I mean, nothing's signed yet. Nobody knows where this is going to end up. But the markets, especially soybeans, have had a pretty substantial rally in the last several sessions. So I wonder, should producers be taking advantage of this rally now in some way, especially ahead of Thursday's meeting? I mean, what do you think about that and this rally we've seen, Matt?
Yeah, I mean, I'm always a big fan of selling rallies, at least incrementally. I mean, you look at just a couple weeks ago to today, some of these contracts low to high rallied pushing 90 cents. I mean, it's been a run. I mean, that's all there's to it. Today, second day in a row, we saw beans in the up in the 20s. We settled 15 cents off the low. I mean, or off the high. And so clearly the market, in my opinion, is running into a significant amount of hedge pressure, I'm sure. The other thing that you're probably running into is people that have made a lot of money being long beans in a very short period of time. And a little bit of profit taking's probably gone on here because let's face it, nobody knows. I mean, I'm not throwing shade whatsoever, but if President Trump wakes up in a bad mood tomorrow, who knows what'll happen? I mean, we've been down this road before. We've got a trade deal. Oh, we don't. We're going to slap 100% tariffs on. We just don't know. We really don't know. But it's been very positive news. I mean, it sounded. Scott Bessent said, "Hey, we've got the framework of a deal in place." I've heard 10 million tons floated around, which quite frankly, I know some people say, well, that's not that much compared to, I'll tell you what, Jesse, our exports have been pretty good without China so far. So if you can throw 10 million tons in there, that's not bearish in my opinion, because I think the overriding thing is there's a lot of talk that there's supposedly some guarantees, so to speak. I don't know if you want to call it like a phase one trade deal, but some talk that there's going to be some assurances that next fall we're going to be looking at purchases and for not just this marketing year but next marketing year as well. And so if that's the case, then I certainly think it would be supportive to the market. But a lot of times when you see rallies like this on news like this, you buy the rumor and you sell the fact. And so I guess what I would be concerned with, to address your question, is that we sit on our hands thinking, oh man, this thing's just going to keep going. And maybe we're expecting 10. Jesse, we could get 12 million tons on Thursday in the market go down. I mean, it's a very, very likely scenario that could play out. So, respect the rally. There's nothing wrong with selling some increments at a much better spot than what you've been in here very recently.
Well, I know it's a tough thing, and you could, better than anyone I know, probably shed some light on this, because I'm sure a lot of producers have found every nook and cranny to throw beans in this fall.
Man.
Bean yields have been good. You you just put them away, and now you're looking at going and taking them out and hauling them to the elevator when you thought you were done for a while. And so, I
Yeah.
mean, it's that, what is that price that ultimately gets someone to say, all right, I'm going to take these beans out of storage, haul them to town, take the
Yeah.
rally, et cetera, et cetera. I mean, that's part of the conversation, I think, here as well, Matt.
Oh, for sure. I mean, and so anywhere that you get close to done or done with harvest, as you get close to the finish, especially in a year like this, you said that we were socking these beans and corn, both every place we could put on. I've heard of guys and gals putting stuff in government storage bins, sheds,
Mhm.
bags everywhere. We've got more bags this year than we've ever seen, and so with that being the case, basis is going to improve towards the end of harvest. Why? Because they didn't originate all the beans they thought they were going to, and in some cases corn as well. And so as you get closer towards the end of the finish line, so to speak, then all of a sudden your basis improves, and then you tack a 60, 80, 90 cent rally on top of that. And I'll tell you what, sometimes we can make things too complicated, and so I know a lot of growers had told me, boy, if I had a sniff at $11, I could make this work with my yields this year. And here we are, and now we're bullish. We're bullish because that's what our mind tells us to do. And the market's going up every day. We're going to get bullish. But I'll tell you what, I want to look at these things as an opportunity more so than just, hey, let's just get more bulled up here.
Everyone's been talking about beans and the rally there. Corn quietly tagging along, not as substantial of gains as beans, but still getting some better price action in corn. What's the conversation like there as we wrap up harvest, with the caveat that, like you mentioned earlier, a lot of areas turn very dry, rapid harvest. We had southern rust issues in many places, et cetera. Yields weren't as good. So, I mean, what's the conversation in corn this week?
Yeah, I mean, so 425 kind of stopped corn dead in its tracks on D's forever, and then you come in here this week, and I would say corn has been a reluctant follower of soybeans.
Mhm.
There's not a whole lot of news out there that would make you rally this corn market. But clearly, when you look over at beans yesterday and they're up 20 some cents, there's spillover support, and that's what we've seen. Saw it today again, and so now today we went up within a penny of the 200-day moving average there in D's corn, which is up there around 438 and a quarter. Clearly, I think if you could have gone up there and settled above it, you'd unsurface some buying, because, the thing is, yes, there's going to be plenty of old corn. We know that. I mean, there's old corn around. If you're going to take the yield down, I'm with you. You're probably going to take the yield down some once we finally get USDA up and going. You take the yield down, you've got demand that you're almost certainly going to see come lower with it as well. And so you take the yield down, you take demand down some. So where's the focus going to lie to get yourself, some sort of a rally? It's going to have to be based on a couple different things. Probably 26. First of all, what kind of plantings are we looking at? Are we going to be able to plant enough to feel good about, even with some weather issues, we're going to satisfy demand? And the other thing is, you look up at the board here, and as you and I speak, let's see, we closed no 26, above $11. So 1103. I'll tell you what, corn on corn, corn on beans, beans on corn. You analyze those three, and none of them before this little rally looked like they were going to be a winner whatsoever. Now you start talking about some $11 beans, and they're all probably getting a little bit closer to making a case for scratching out a break even, if you get good yields. But, if you're still looking at pretty tough numbers, you're putting a lot less money on the table with soybeans. And so with a huge corn acreage number for this year, 90 million harvested, I mean, I'll tell you what, you've got to think that you're going to see a bit of a switch just with corn to beans, beans to corn guys, right? And so, the other thing would be corn on corn. What's the appetite to go out there and fertilize what we need to fertilize to make corn on corn work, when fertility is just so expensive at this stage of the game?
That's a great point. I mean, the input price conversation, those pesky prices that are out there that nobody really loves right now, Matt. I
No.
mean, as you're starting to look at things for next year and maybe doing some forward marketing, even dipping your toe in, I mean, whatever the case is, but, fall fertilizer programs? Are we going to really see them like we normally do? All these things, to your point, feels like right now with this rally, it could maybe allow some producers to start to not lock in decisions for next year, but at least get plan A kind of rolling along a little
Mhm.
bit here.
Yeah, I mean, I think, Jesse, you're going to see the lowest dry fertilizer tonnages you've seen in many years, especially with regards to phosphate. DAP and MAP up here around $900. You throw this in your balance sheet, you throw it in the cash flow, and you're like, how in the world am I going to be able to make this thing work? And so, I think a lot of some of the university stuff, farm doc stuff, it's great information, but one thing that I've looked at is, what fertility program are they using? Are they using a 2.25, 250 type deal? Or, because if they are, there's a very small amount of people that are actually using that program. It's more like half of normal. A lot of people that have told me, or 100 pounds of phosphate in some cases, and maybe 150 potash, relatively speaking, it's pretty reasonable. It's pretty reasonably priced, but phosphate's anything but, and then you look at some of your UAN and most of your nitrogen sources, very expensive. And we know we can't skimp on nitrogen. So you've got to assume there's going to be a fair amount of skimping as far as dry fertilizer goes. So then the question is, as you get these tonnages, as you roll through, get closer to winter time frame, the question is going to be, are guys and gals going to back off of corn plantings, or are they just simply not putting as much on? And so this is a conversation that's going to go on for a while. It's going to take a little bit to figure out. But by all means, I think that whenever you see November 26 beans getting up above $11, if they can establish themselves up there, it's going to put pressure on this D26 market to kind of hang in there, because I don't think that you want to see, 11 plus beans and, you're still not even at your spring insurance price, 466 and a half. It's not a terrible price, but at these input prices, it doesn't work.
Matt Bennett with agmarket.net joining us here today on Market Talk. And let's go over and talk the cattle trade. And I saw you were on Market to Market this past weekend and talked a bit about beef prices and more. I mean, it's been a ride the last several days with everything going on the headlines and all the uncertainty out there. We kind of tested expanded limits in feeders again Tuesday, but we did try to find some green and live cattle. What's your take right now in this cattle complex? I know it's not been a fun one for a lot of ranchers.
No, it hasn't. And Jesse, I did get a little bit of feedback about my market to market appearance. So I don't know if you watched it, but all I said was, when you start talking about Argentine beef coming in, okay, it's 80,000 tons. Quota right now is 20. If you take it to 80, you're basically going to take our total imports up less than 1%. Okay. It's not a huge deal. I think the overarching thing, though, is we are going to bring beef prices down. And then the tweet or social media post, whatever it was, that said cattle producers need to lower their price, and they need to thank me for their prices being so high. And so, this is not a political statement in any way, shape, or form, Jesse, but the bottom line is, you and I both know these guys have gotten driven out of business in the last 10, 15 years. The drought, 3-year drought in the Western Corn Belt, where guys and gals couldn't keep heifers if they wanted to, leading to 70, 75-year lows in the cattle herd. That's what's driven the market higher. Okay. But the scary thing, I think, for the investor, and the reason why you've seen this debacle, is that if you're a fund that's been holding a long cattle position and the president of the country comes out and says, we're going to drive beef prices lower, that makes you a little hesitant, especially, when you're sitting on massive profit margins that you've made over the last few months. And so I think what we've done is we've just pulled a ton of the investor money out of this cattle market. And as you suggested, fats tried to kind of stabilize, which makes a heck of a lot of sense, Jesse, because, I think that some of these guys are saying, hey, you know what, we're not going to go ahead and sell fats right in here. And so I think that the functionality of the market is that your cash cattle trade for fats is still quite strong. And whenever you are seeing that thing hold together, it makes it really tough to see the board fall apart. Now on feeders, it's a little wilder. We've heard of guys, $150, $200 a head, that
Mhm.
they've lost a lot of ground here. And you've seen prices a lot softer than just the $60 that we've lost on the board. And I say just because you look at that chart and make you want to throw up. You've gapped lower, gapped lower, gapped lower. It's just been a rough go, and that's all there is to it. But I've got to think that overall, the biggest issue that has made us gap lower consistently and made us so weak is that we're going to meet with Mexico this week. I think that that's the thing that's got the market as spooked as anything, is that Brooke Rollins, the Secretary of Ag, is going to meet with them. Clearly there's nothing, we don't know any more than the fact that they're going to meet. But I think a lot of people are just really scared that if the administration is super convinced that they have to get beef prices lowered, that maybe that border opens up a little earlier than what it should. Now, that's way above my pay grade, but
Same.
we're 1 month removed from screwworm, 70 miles from the border. I'm very hesitant to think that that's a wonderful idea. But again, that's above my pay grade.
From the rancher perspective, do you stand in front of this freight train and try to manage your risk here? Do you let the dust settle? I mean, that's a tough conversation. I don't know what you do here, Matt.
As we sit today, it's pretty tough for me to get real aggressive with downside protection after the absolute meltdown we've seen. I think it's a really good sign to see, first of all, fats mixed on the board today. I mean, that's nice to see. I mean, you look over here at feeders, and feeders closed off the limit lower move. I mean, clearly it wasn't a good day, down $10, $11, $12. I mean, it's just, it's nothing to celebrate, if you will. But I do think it tells you some of that get me out right now type trade, is maybe going to start to subside just a little bit, and maybe the dust will settle. But Jesse, I'll tell you what, I struggle to think anything other than that the high in the cattle market's in. I mean, it's pretty hard. You look at that chart and you're looking at monthly reversal. There's just not a lot of good things to talk about here. Fundamentally speaking, if all things were equal, you would think we're still in really good shape fundamentally. It's just that if you start letting those cattle in from Mexico, that would probably be the last nail in the coffin, at least for the time being.
Matt, always appreciate your insights. Anything final you would mention for folks? Anything you reiterate here on the show today?
Yeah, I mean, I think that the cattle market shows us that, you can't take anything for granted here, and so clearly we're talking about a trade deal with China. We do have a bird in the hand right now, and I know everybody wants the two in the bush, but, sometimes you got to understand that these markets, whenever they do move against you, can do so quite violently. And so, managing risk whenever you got an opportunity to manage at a much higher level than what you were, makes a lot of sense to me. So I do want flexibility in my programs, but at the same time, I'll tell you what, doing nothing at a time like this when beans have rallied so sharply is probably not the smartest thing to do.
Matt, I know you guys have a great team, a lot of knowledgeable folks over there at agmarket.net, and plenty of resources folks can take a look at. It's all just as easy as starting on the website, right, Matt?
Yeah, absolutely. Just go to agmarket.net. You can get anything you want there. You can come to the conference and, see Jesse and myself, in Nashville there at the start of February. Got a heck of a lineup of speakers. It's right there on the website, though. They can get whatever they want to get there.
And I will echo the sentiment. It is a great conference. I've been the last couple of years now, and you can get all those details and get signed up now at agmarket.net. Matt Bennett, always good to hear from you, sir. Thanks for joining us on the show today. We appreciate it.
Yep. Thanks for having me, bud.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@markettalkag and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.